shouldn't even use all 250, right? Depending on what kind of loan. If you want to do an FHA loan for whatever reason, because you're doing a 203K or whatever, right? You only put down 3.5%, whatever it is. There may come a time where, depending on how much money that you have in the bank, we may keep most of that in the bank. We'll look at your loan to value to see what kind of interest rate we can give you. So there's a lot of things that we want to know when you're buying that house. Does that make sense? So I'll ask Mike to go get that documentation. I want to make sure that you have buy-in for what's going on. And I'll talk to you about the appraisal. I'll talk to you about all the things that go on. But who slows down our deals more than anybody else? I say it's the seller and the buyer. The buyer's number one. Buyer's number one. Then the attorneys are in there somewhere in that mix. But the buyers are probably the ones that take the longest time. Your buyers, I've called them 3 times. Once a day, they told me they're going to send in these documentations. Anybody have that happen? Yep. And what do? You go and get it. Ooh, I would work with you in a second. That's the correct answer. So let's talk about loan to value for a second, because this is important. We've all heard the terminology loan to value. Who, aside from the appraisers in the back, wants to explain to me in simple terms what loan to value actually means? Yes?
Well, if the selling price is $775 and it appraises to $775, the bank will give you 80% to that. Well,
we may give you 80%.
Well, they will give you up to 80%.
We might give you up to 97.75% or 96.5% on an FHA loan, 97% on a conventional loan. And if we're doing a seller's concession or all that other stuff, we might give you more. And on a 203K, we might give you 110%. So there's a lot of range that's in it. You didn't know that, right?
Wow.
Yeah. I have courses on reverse mortgages, 203K, all of those things we teach you about. So loan to value is an important thing. Here's why. A simple way to know what loan to value is. Loan to value means nothing more than what percentage of the value of the home have they borrowed. You really want your dollar back, huh? She wants that dollar.
I said percentage of the value.
I'll tell you what, when we finish up the class today, if you give us a really good answer at the end of the day, yeah, you might get $2. I'm going to put your dollar back up over here. I was trying to get enough money to go to Ruth Chris Steakhouse tonight, but I guess that's not going to happen. All right. So it's nothing more than what percentage of the value of the home have we borrowed. Now, when the appraiser goes out in a purchase market, because they're just giving their, I shouldn't say just giving, they're giving their professional opinion to support that value. That's why in 99% of the cases, the appraised value and the purchase price come in the same, if you ever wondered. In your case, I offered you $800,000 for your house. It appraised for $775,000. The bank is going to lend me money based off of which value?
$775,000.
Why? Because why? It is the lesser of the appraised value or the purchase price. I'm going to go broke here. Leo, I got to head to the craps table later and get this money back or something. That is a correct answer. It's the lesser of, we talked about it earlier, the appraised value or the purchase price. Now, if it appraises for $775,000 and I made the offer for $800,000, comes in at $775,000 appraisal, can I still buy that house? Yes. What do I have to do? Come up with the cash. That's why during the process of talking to you and your husband, you got to say, I want to put $1 on my answer. I'm going to ask you, how much do you have? Now, I know you really want that house over there. I hear you guys talking about, oh, we really got to get that house. Let's say that because what kind of a market would push those prices up? Seller's market, right? So you're going to overbid for that house a little bit because you're going to live there for the next 20 years, right? You're going to raise your kids there. You really want that house. So if it's selling for $775,000 and you offer $800,000 and the deal is done, I want to make sure as a real estate agent and even as a mortgage guy, because when do you guys get paid? When it closes. When do we get paid? When it closes. So we want to make sure that we're working together. I want to make sure that you have that extra $25,000 liquid somewhere, even if it's a gift letter that somebody's giving you, but I want to make sure you have it, because will that kill a deal if people don't have enough money to put down? Even if there's a little bit of a seller's concession in there, might not be enough to cover all of that stuff. Are you with me?
Yes.
By the way, has anybody here ever done a deal where you put the seller's concession in after the contract is already done? Yeah. How is that? You like doing it that way?
It works.
Yeah, don't do it that way, though. Really, don't do it that way. Make your offer with the seller's concession in there. Fair enough?
In our market, though, we have home inspections, and oftentimes you need credits to...
Yeah. Well, there's a difference between a seller's concession and a seller's credit. A seller's concession. What is the borrower doing with a seller's concession? They're financing some or all of their closing costs. Now, you want to be very careful when you do a seller's concession in your offer. Why? It doesn't affect the true value, but yes, the answer is yes, it affects the value. I'm going to go with that.
The house may not appraise with the seller.
What happened?
The house may not appraise.
It may not appraise. So you got to be aware, as a real estate agent, what is this market holding for me? So if I'm going to buy a house and I want to put a 6% seller's concession on there, if the house is $400,000, let's do a simple one, 3% seller's concession, $400,000 house. How much does that house have to appraise for approximately? $412,000, a little bit more because we're taking 3% off, but let's call it $412,000. If the houses in the area sell from $200,000 to $400,000, it's much harder to get that $412,000 than it is if the homes go from $300,000 to $500,000. It's much easier for the appraiser to make that little bit of adjustment. You shaking your head? You have had this experience? What's your name? Rob? Hi, Rob. Tell us about the experience.
I had a property in Mount Laurel that was listed across the street. It was actually an acre property. It was across the street from a neighborhood that comped between like 315 and 375. And a flipper got it, and it went to contract for 415, which it easily could have gone for, but there was an issue actually where the appraiser was out of town, was from out of the area, and he counted at 410. So it wasn't a major issue.
So instead of 415, it comped 410, and did it have a seller's concession in there? Did it kill your deal?
No, we got around it.
Because 415 and 410 is not a big deal. It's a few $1,000s, right? They probably got 75% of their closing costs paid anyway, right? Now, thank you for sharing that, by the way. Who generally uses a seller's concession? FHA will use it, but the buyer, well, let's talk about the buyer. What kind of a buyer usually does a seller's concession? First-time home buyer? Okay, I'm going to ask you a simple question. You said, who? You guys all said first-time home buyer? You want to put $1 on this one? I'm going to ask you a question. No? Okay. Want to put
yes.
Yes? Okay.
Yes.
Shh, nobody help. Shh. What is a first-time home buyer? Shh. What is a first-time home buyer? Ah! No helping. No helping. No helping.
All I can guess at this point is I'm trying to work around first mortgage. I never.
Oh, I'm going to let you off the hook, all right? No dollar. I'm going to let you off the hook. Who's got the answer?
Someone who hasn't bought a home in 3 years.
So,
Okay.
it's not just people that are first time ever buying a home. You could own a home for 20 years and sell your home. You haven't owned a home for 3 years, you become a first time home buyer. Or divorce. Why do you got to bring that kind of stuff in here? Remind me. But when we do mortgages, we really don't worry if somebody's a first-time home buyer or not. Those only come up if somebody has a program. Oh, the city of, here in New Jersey, Red Bank says everybody that buys a house here that's a first-time home buyer will get $30,000 for their closing costs. If you live in the house for 5 years, we'll forgive it. If you don't, it's going to be a lien against you. So that's when a first-time home buyer really comes into play for us. But a first-time home buyer is defined as somebody that hasn't owned a home for at least 3 years, right? All right, so let's move back on to loan to value. So loan to value is an important thing. We call it loan to value, but the acronym that we use in the industry is LTV. What's the LTV on that property? Does that make sense? The acronym, LTV. Now, back in the days of high school, we had to take algebra, trigonometry, all that stuff. There was math to be done. We actually have to look at a formula. We're looking for a percentage. Debt to income ratio is a percentage. Loan to value is a percentage. We're looking to see what percentage of the value of the home is the borrower borrowing. Because that's important to our what level? 4 letters. Risk level. So, this is what you're going to do. You're going to put a dividing line right through the T, and the formula becomes loan divided by value equals, right? I'm going to guess, so first name again? Will. Will, way back in the day of high school, Will, when math class was going on, let me just guess. You were outside hanging out in the schoolyard with me, and you're going like this, hey, Doug, we'll never need any of that crap. Wrong hand? Was this hand? How many people thought when they were going to high school that they're not going to need math when they get older? Show of hands, for real. At least 10 to 15 people. Yeah, but
Consumer math makes sense.
yeah, it does. Well, consumer math, is that out the window today? How many people here, I'm old school, you know, used to own businesses making change. So if something you were paying me came to $11 and, 45 cents, and you gave me $21.45, I would know I got to give you $10 back, right? Try that today. It's awesome.
Everything.
Do you do that? You look like the kind of guy that does that, right? I do that too. You go in there, you make them nuts. Give them a penny. They try.
So they can,
You're with me, right? You're with me on.
I did it yesterday.
Oh, that is too funny. All right, so loan to value is a formula. All right. By the way, if you come to my class this afternoon or tomorrow on how to qualify a borrower, I'm going to actually hand out loan to value forms, and we're going to go over it just like I gave you handouts here. I'm going to make you guys do a little bit of work. All right, is that okay? All right. So loan to value, it's loan divided by value. That's the formula. Would you tell me the formula?
Loan divided by value.
That is correct. The formula is loan divided by value. Formula?
Loan divided by value.
You guys picked the outside seats and you said, oh, this is really good, right? But what's the formula?
Then divided by value.
Loan divided by value.
Loan divided by value.
What's the formula?
Loan divided value.
What's the formula?
Loan divided by value.
Good. One more. All
Loan divided by
right, we'll go to this side. Hi. What's the formula? Loan divided by value. How you doing? Formula. That's right. All right, everybody. The formula is loan divided by value. You're with me, right? Okay, now, where do we get the value from? Oh, I got to take a knee on this when he said the appraisal. Oh, I thought we just went over this morning. In a purchase transaction, it's the lesser of the appraised value of the purchase price. That's what we use.
Yes.
In a purchase transaction. If I'm doing a refinance, where do I get the value? Appraisal. But in a purchase transaction, because you guys don't do refinances, we do as a lender. You guys do purchase transactions. We, as the lender, will use on your purchase transactions the lesser of the appraised value or the purchase price. In about 99% of the cases, they come in the same. You got me? All right. So, if we know what the formula is, let's say, for argument's sake, that we have 3 houses. And let's say each one of these homes worth $100,000. And let's say that they have mortgages on them. This one is $60,000. This one's $82,500. This one's $125,000. So we have 3 homes. They're all worth $100,000 each. This one has, property 1 has a mortgage of $60,000, $60K. Property 2 has a mortgage of $82,500. Property 3, $125,000. Can somebody tell me what the loan to value ratio on property number 1 would be?
60%.
60% is a correct answer. And by the way, when I teach this in the class, people go through the calculations. It takes them a half an hour. You should be able to do this just like he did. Boom. So you weren't cutting class that day. I could see that. How did you get 60%?
Loan divided by value.
Loan divided by value. By the way, when I hand out these samples, and some of you guys will come to the class later, you'll know this already. Some people divide the 100,000 by 60,000, which is the opposite, because this is the value, this is the loan amount. So you got to know what belongs where and put it in the formula. So 60,000 divided by 100,000 says on your calculator 0.6, which is 60%. In this particular case, this borrower borrowed what? 60% of the value of the home. What's the other 40%? Equity. Is that good? Of course it's good. If I was lending somebody money on this house, they got plenty of room to cash out and everything like that. If somebody's selling the home, they got a lot of money coming to them. Fair enough? Okay. What about property number 2? What's the LTV on that property? Let's say I'm going to volunteer somebody. Hi, how are you? All the way over there. What's the answer? The value of the house is $100,000. They have a mortgage balance of $82,500. 82.5.